Good afternoon and welcome to an updated opinion of economy investment markets. My name is Joe Terril, president of Terril and Company, of a private wealth managers headquartered in St. Louis, Missouri. Today is New Year's Eve, December 31st, and helping me as always in today's call is Brian Curtis. And we want to wish everybody, our clients, associates, a very happy new year, and we look forward to a wonderful 2015. The world economy as we head into 2015 is in pretty good shape. There's been some concern that we're having a worldwide slowdown because of the complete collapse of the price of oil, the collapse in interest rates. We do not see this. We do not agree with that. Worldwide demand is just fine. The fact that we have a dramatic increase in supply of oil due to technological genius of oil producers is not an indication that the worldwide demand for oil is falling. The fact that we have a tremendous amount of worldwide capital that is looking for a home is, again, not indicative of the fact that we have some type of economic collapse, therefore interest rates are zero. We felt for most of 2014 that the world economy was going to be just fine. As we head into 2015, we are in the same camp. Now, to throw the obvious caveat into this, we do believe Russia will go broke, the Russian economy will collapse, and this obviously has more to do with the politics of Vladimir Putin as quote-unquote dictator in that country, the fact that the world is lined up against him, sanctions that are being imposed against Russia, and even in my opinion, the cooperation of OPEC countries to drive the price of oil to a very low price, sort of a backdoor way of putting economic difficulties at Putin's feet. So somewhere in 2015, probably earlier in the year rather than later, I think we'll see a real problem with Russia. And that will not be indicative of somehow we're having a worldwide economic collapse, and it certainly will not be indicative of, well, Russia's broke, therefore the rest of the world's all going broke, Germany will go broke, and this domino effect that some people seem to think must happen, relating back to 2012 when the conversation was Greece and people were thinking, well, Greece would go broke, therefore everybody throughout the world in a domino effect will go broke. No, that will not happen. So we think the world economy will be fine. It's not going to enjoy spectacular growth, but there will be growth. Certainly the lower price of energy longer term is a huge positive for the world economy, and we do believe these energy prices are going to stay down. And as that works its way through the economy, being a positive, we may see the demand for capital pick up, and we may see somewhat of a change in investment markets, which we'll talk about in just a moment. But for right now, in the limited time we have in these messages, we're still positive on the world economy. We do believe that the one issue that is there and pending is this bankruptcy of Russia. Maybe we wake up one day and find out Putin's been assassinated by his own people, and it won't be as big an issue as maybe what it could be to the world economy and investment markets. But short of that issue right there, we think we see an actual pickup in Europe, not dramatic, but a pickup in Europe. We think the United States economy will grow very well. Certainly China and other areas will do decent, and otherwise we're bullish on the world economy as we head into 2015. Investment markets in 2015 will most likely be dominated by interest rates continuing to stay low. This is a little bit contrarian to what certainly markets expected in 2014, when interest rates on a 10-year U.S. government bond were 3 1/8. They're ending the year at a 2.15 with a dramatic fall in rates. We don't necessarily believe there's going to be a fall in interest rates around the world, but we do believe that interest rates are going to stay down, that they're not going to go higher. The Federal Reserve Bank in the United States is certainly talking about perhaps later in 2015 increasing interest rates. Maybe they do on short-term rates, but we don't see the demand for capital that is out there that's going to be able to absorb the amount of capital to raise interest rates. Even a 2.15% interest rate on a 10-year U.S. government bond is attractive when you consider how many countries around the world have negative short-term interest rates and 10-year bond rates that are in the 1% vicinity. So in investment markets, we believe you'll continue to see interest rates stay unchanged, maybe slightly lower, slightly higher, but we do not expect an increase in interest rates. In investment markets, we think stocks will continue to do okay, predicated upon the belief that there's nowhere else in the world for world capital to flow. The constant generation of interest, dividends, new funds, payroll deductions, premiums being paid to life insurance companies, this flow of money has nowhere else to go. And we've seen for 2014 markets move higher, predicated upon the simple fact that world capital is flowing into U.S. stocks. We don't look for dramatic gains in the markets, maybe 5% gains in the stock market in 2015, but we do believe that overriding dominating factor will continue to allow stock prices to go higher. We're a little more bullish on international markets and believe that perhaps a recovery in Europe, and if we see in China and the South Pacific, where some people have expected those countries to have calamity hit them, when calamity doesn't hit them and the world economy continues to do okay, perhaps those markets will do even better also. So we're a little bit more bullish on international markets than we are the United States, but with that said, we still believe the U.S. market could return perhaps 5% plus dividends in 2015. We believe commodity prices on such things as gold, farm ground, will stay very much under control in 2015, perhaps even be slightly lower. We mentioned earlier that we think the energy prices are going to stay down, and even to the extent that we believe food prices will come down a little bit during 2015. So some of the other markets besides stocks and bonds, we don't think there'll be a lot of performance there in either real estate, gold, silver, or other commodity markets. We want to thank you for joining us today and reiterate our well wishes that we have as successful a 2015 as certainly we have in 2014. and wish everyone a happy new year and the very best for the upcoming new year. Once again, I'm Joe Terril, president of Terril and Company in St. Louis, Missouri, independent wealth managers with about $760 million of discretionary money under advisement. And Brian, a special Happy New Year to you and your entire family. Thank you for helping us during the year with these video casts.
Thank you. Happy New Year to you as well.